Hey, I hope everyone's doing well today. I appreciate your time. On today's Money Not Math conversation, I'm going to be talking about some best business practices based from my good friend Jared May, who has May Bookkeeping Solutions. And we were having our conversation a while back, and we were just discussing some different things. And I asked him, if he was going to give three pieces of advice to a business owner, what would they be? So he sent me the top three things he would recommend to business owners when it comes to their bookkeeping. So I'll read through those and provide my own commentary as well. And I hope today's conversation brings you value. So number one, Jared said, keep your business expenses separate from your personal expenses. Have a dedicated bank accounts for your business. Pay only business expenses with those accounts. Deposit money from sales only into your business bank accounts. Additionally, if you have more than one business, do not commingle funds between them. Not only are these best business practices, but you may find your CPA or bookkeeper will charge you less for their services. So I think this is huge. One, because not only is Jared kind of explaining why it's important from a keeping track standpoint, but he's also explaining how you can save money. So I think it's always nice when people in the business are telling you how to pay them less, right? So on the other side of that, I would strongly encourage, even for your business and your personal accounts, having separate accounts for different purposes, right? And as annoying as that may seem, in today's world, it's really inexpensive to open accounts. And the reason why I say that is, I think from one of the biggest pitfalls when it comes to financial planning that I see is the lack of allocation of money or cash flow. And what I mean by that is, if you think about a big company, so here in Thief River Falls, the biggest company is DigiKey. Depending on where you live, obviously your biggest company will be different, but let's just use them as an example, a multi-billion-dollar company. Now, could you imagine if all of the income that DigiKey had, all of it, just went into one account, and then every department within DigiKey just kept pulling and pulling and pulling from that account until it was empty? And then they're like, oh crap, we need to add more to the account before we can spend more. That would be absolute chaos, wouldn't it? It just would not work. So I don't work for DigiKey, but what I imagine they do is they plan forward and they allocate. This much goes to this department, this much goes to this department, this much goes to this department. So it's very specific, and they can keep better track and be more efficient. And most importantly, from a business standpoint, they can keep their profits high and their losses low, right? You want a large profit margin. Well, we want the same things from a personal financial planning position. The problem, what happens is so many people believe, well, I don't have that much money. Why would I be that, disciplined or organized around my money? So what we do is we just have one slush fund, aka our checking account, and every department, aka lifestyle spending, golfing, saving, kids, travel, it all comes out of there. Everything comes out of one account. And we spend, and then all of a sudden it's like, oh crap, our account's getting lower, it's empty. So hopefully that example provides some insight as to why I believe it's so important, whether you're a business owner or not, to not only track your funds historically via bookkeeping on where money's going, but also for planning forward, organize your money and allocate it very specifically on where you want it to go if you really want to be as efficient as possible. If you have more questions on that and how to build a budget and things like that, or how to separate accounts, of course, you can let me know. Number two, do your bank reconciliations monthly. Banks can make errors just like an individual can. Reconciling your bank statements allows you to catch any errors made by the bank or you when discrepancies are fresh. They are easier to track down and resolve. You deserve every cent that you've made to show up in your bank account balance. And I, again, completely agree. No surprise there. In fact, I check my statement basically almost weekly. I do my own review. I'm not saying you have to do it weekly, but it's extremely important because I've made mistakes in the past. The bank, I'm sure, has made mistakes. But on top of that, where I've seen the most errors or confusion is when it comes to automatic payments. Sometimes companies will accidentally double draft, or there'll be a missed payment. And then a month later, you'll get a nasty gram that you missed your payment. Whereas if you would have caught it ahead of time and gotten in front of that missed payment because of whatever the technological error was, it's a lot easier to resolve. Number three, spend time each week on your books. So I guess he's kind of going where I just talked about on two there, but procrastination can make a task like doing the books seem insurmountable. Keeping your books up to date and making sure all transactions are entered is the first step to creating peace of mind for yourself. As a bonus, you will be armed with all of the information you need to make critical decisions for the future of your business. And I think this is so important. When Jared and I would talk about bookkeeping, I myself was thinking a lot of, even when it comes to like CPAs, your accountants, a lot of their job, or at least what we use them for, is to look at the past. It's like, okay, this is what you did. This is how much you owe. This is what your books look like. But I believe even more important than that, arguably, is how can we forecast forward? How can we adjust how much we're buying in certain areas? How can we allocate our funds better for certain areas? Maybe spend less here and spend more there, whether that be marketing, whether that be materials, sales, whatever it may be. The ability to know, have clarity around where you've been in order to make better decisions for where you're going is extremely important. And again, it all comes back to that profitability, right? Many businesses have a good income, but due to lack of controlled and organized spending, their profit margin is so low, if not negative, they don't last. And I absolutely want as many people's businesses to last as possible, especially when we have tough times like this, when you have unexpected life events like COVID-19 or market corrections and things like that, right? This is a bit of a different situation because the government's actually trying to help bail us out of a tough spot, but they're not going to be there if there's just a natural market correction like there was in 2008. Well, I guess that wasn't really natural, but only the big guys got the help, not the little business owners. So those three things are extremely important. Again, number one, keep your business expenses separate from your personal expenses. Number two, do your bank reconciliations monthly. Number three, spend time each week on your books. And from my personal point of view, I would add to that, make sure your personal planning and your business planning, they work together, but they are separate. Far too often, I meet with business owners who have a complete idea of what their business planning is, but their personal planning is on the back burner or vice versa. All right, and we want to make sure they're both working smoothly and still working together without having overlapping costs, because sometimes you can cost yourself too much money by having them separate. And then the last one I'll leave you with is emergency funds are extremely important for both your personal and your business expenses. Even though it's not fun to watch money just sit and do nothing, you get the itch to either spend it or invest it. Having 3 to 6 months of your expenses is extremely important, not only for times of need, but also for times of opportunity. All right, so that's it for our conversation today. Again, thank you to Jared May for providing this topic for us today. I hope it brought you value. Please let me know what you think by reaching out, commenting, liking, or sharing my post. I really do appreciate your time and hope you have a great day. Thanks. Bye.